Help us understand and give us some color on what is driving your margins. Can you build on the current margin uptick that we've seen, because it's been largely a good quarter for you?
Very good morning to all of you and to all the viewers, and a very happy Diwali. See, in this quarter, we've had the benefit of the repo rate cut, in fact, with all the banks, because all our bank borrowings are linked to repo rate. Unlike, many other these things where it was earlier linked to the MCLR, whereas we moved consciously to all the bank borrowings to repo linked, and that we have got the 100 basis points benefit across all the bank borrowings. So that has been one of the key drivers. The second, of course, has been that, in terms of our yield, our yield has been maintained at 10.08, which is because we have slightly shifted our segment from salaried to self-employed, which also is a conscious call, because by FY28, we have a vision that we would like to move to about 65-35 in terms of salaried versus self-employed. So in that area also, we have done some shift. So our self-employed portfolio is slightly giving us a little better yield. So also is the fact that we have slightly increased our non-housing, because our housing portfolio was almost 89% a couple of years back. We've moved it now to almost 86%. So about a 3% increase in the non-housing category has also helped our yield. So while our yields have held on, we've been able to see the benefit on our bank borrowing, which is almost 57% of our liability side is banks. So that's been the major reason. In spite of us actually passing on 25 basis points across to our existing as well as new customers.
Oh, all right, so that's as far as margins are concerned. Mr. Iyer, morning. Ashesha this side, and season's greetings to you and your team. Since you're talking about margins, and net interest margins in the previous quarter stood at 4.02% versus 3.64% in the previous quarter. What will the guidance be for the full year FY26?
See, earlier we had given a guidance of 3.5% NIM, 2.5% spread, and 3.5% NIM. But looking to the fact that in the 2 quarters we've been able to have a very strong borrowing, and plus a pipeline that we have of sanctions on hand and unutilized sanctions, I believe we will be able to sustain this kind of cost of borrowing. So I guess we'll have to. I believe it will be more prudent to increase our guidance to 2.75 and 3.75. We of course have a margin. We have kept a little margin on that, because we may have to kind of give a slight benefit in terms of the rate of interest in Q4 to push business. So keeping that in mind, I think 3.75 NIM and 2.75 spread is something we would like to work on.
Right, and what will your growth guidance be for the full year, loan growth guidance, if you can help us with that figure as well?
Sure. In terms of growth, we are looking at AUM growth of 12 to 13%, which is what we have been guiding throughout the year. And we are confident with the kind of business that we have done in Q2 and the pipeline that we have. Q3, Q4 also, we should be having a good growth in business. And so we are holding on to a guidance of 12 to 13% AUM growth.
Okay, and so that's your growth guidance, but also help us understand on the ROA front. It's around that 2.5% mark. If growth is stronger and margins are also sustaining, especially, then what is your read-through on ROA, and where do you see that number headed?
See, in ROA, I think we have been guiding for 2.2, but we have consistently been able to maintain about that. So I guess, some improvement over 2.2 is definitely on the cards. I wouldn't want to say much on that as of the moment, because I guess, with everything staying constant, our credit costs also, we are expecting that should not be what we had guided of 0.15 or 0.15%. I think our credit costs will also be lower by the end of the year, because for the third quarter in a row, we have seen a reduction in our absolute delinquency numbers. And going forward also, I believe in Q3, we can expect a little improvement further from where we are right now. So that means our credit costs will also be a little lower. So that should help.
Right, so credit cost is expected to be lower in the second half of the year. That's as far as FY26 is concerned. What about FY27 then? 12 to 13% AUM growth is what you've guided for this year. Any outlook that you can share over the next 1 or 2 odd years?
Sure. See, in the current year, we have a slight overhang of the IT transformation project, which we are, scheduled for, completion in the end of this Q3. And once it is stabilizing in this financial year, I think next financial year we should start seeing the benefits coming out of the IT transformation. So that should help us in pushing our growth. And with a 20% disbursement growth next year, I'm sure we will be able to push up our AUM growth also to somewhere closer to 15%.
And so also help us understand what is your target for your asset quality, nominally on a sequential basis, but they have improved. Any long-term guidance on that?
See, we have, if you see our track record, our gross NPAs have always been below 1% throughout for the last 10 years or so. And even right now, as we see, we are, in spite of a slight shift in our segment as well as our, product, we believe that we will be able to easily maintain this kind of a thing because presently our customer profiling and the customer selection is quite conservative. And we have been able to maintain that kind of a quality because which is reflected in our CIBIL scores of customers whom we onboard. So keeping that in mind, I feel we should be able to maintain it at the level, current levels, or be maybe a little better, but at least current levels, I would say would be fair to assume.
Understood. And what about your disbursement guidance then? You've guided for 12 to 13% loan growth. Return on assets is likely to improve. Disbursements also shot up nearly 7% on a sequential basis. If you can help us through what the guidance will be for the rest of the year.
See, we've done 4,500 crore in H1 in terms of disbursement, and for the next 6 months, that is H2, we expect anyway. H2 is about 55% of the business, 45% happens in the first half. So that plus the fact that we are having a good pipeline and our sales team, internal sales team that we have set up is also now starting to deliver. So I believe in Q2 and Q3 and Q4 we should be able to push up the disbursements and 10,500 crore is what we have guided for. So another 6,000 crore is what we are targeting, which we are comfortable or we are confident we should be able to achieve.
And so while you're talking about your disbursements, what I understand from your earnings this time is we have seen disbursement revival in Karnataka and Telangana as well. Any specific outlook for those geographies and also pan-India? What is the rate of disbursement if you could just help us on that?
See, actually, Karnataka and Telangana, we are having a good growth. In fact, throughout the year, month on month, our disbursements in both these states have been on an improving trajectory. In fact, today, if I speak around Karnataka in the month of September has given us about 270 crores. And last year, we had peaked at around 278 crores. So almost we are back to the same kind of a number. So keeping that in mind, if with this kind of things continuing and with a couple of announcements from the government that B Khata conversion to A Khata will also happen. Plus, this E Khata approvals also will happen in 15 days, even in case of B Khata properties, which is a recent announcement. I believe Karnataka should start delivering much better. And therefore, in Q3 itself, the negative growth will be reversed and we should be back in the positive in Karnataka as well. Telangana, in fact, our negative was much higher because of this, Hydra issue. So there we may take probably another quarter. So probably in Q4 is where we will turn positive in Telangana as well. But other zones that we see, our West zone is doing 25% plus. Tamil Nadu is doing 25% growth. North is doing almost 30% growth. And so also our East, which is mainly AP, that is Andhra Pradesh for us. So basically other zones are already doing 25% plus kind of a growth, whereas Karnataka and Telangana are on a revival phase. So those two also should turn positive by end of the year.
Okay, so that sounds optimistic on those two geographies. Mr. Iyer, also help us understand what your provisioning outlook is going to be. A very sharp cut in provisioning on a sequential basis. Where is this headed going ahead?
See, actually, it is not a cut in provision. Basically, we follow the ECL guidelines. And now that our, across the board, our SMA 0, SMA 2 and NPA, all numbers have come down compared to June numbers. And overall delinquency, not only in percentage terms, but in absolute terms is also reduced compared to June numbers. So obviously, our ECL guideline requirements of provisioning itself has reduced. So this is the trend. And if in Q3, what we are planning and what we are working towards is to further reduce our gross delinquencies in absolute number. So from a number of 3,800 and close to 3,850, we are looking at another 100 crore reduction in Q3. So if that happens, I think in Q3 also our provisioning may not be a very high number. It could be quite very benign, very low only, because that will be very less only for the growth that we do in our AUM. We will have to make a provision for our as per ECL.
Understood. And if you can take us through what was the slippage figure in the third quarter and what is the trajectory looking like for the rest of the year?
Sure. See, slippage actually compared to Q1, which was 0.22, our slippage ratio has come down to 0.12%. So that's also a positive because, the delinquencies overall coming down has therefore gives us a little more flexibility to push more on the higher buckets, and more follow-ups and rigorous follow-ups is also possible because we have a lower number to start with. So that is definitely helping, and slippages are also have been down. So I guess that should continue with the kind of because another observation that is there is, there's a cash in the hands of the people is slightly, I believe, is a little higher because that is reflected in our prepayment numbers. So that clearly shows that people have been prepaying, and it's not BT out also as much as one would like to believe. It's actually prepayment where customers have surplus cash and they're paying it. So I think that's a positive. It should also get reflected in the collection numbers.
Okay, all of that sounds very optimistic, Mr. Iyer. We hope to interact with you next quarter as well. Once again, congratulations on the good set of numbers for quarter 2, and wishing you a very happy Diwali, you and your team as well. Thanks so much for your time today.
Thank you very much, and a very happy Diwali to you also.
Thank you so